Hello, everybody. My name is Steve Jain. I want to welcome you to this talk on the Bisq network and the Bisq DAO. Looks like we got a bit of a small crowd. I was kind of worried that this title was a little dull compared to the other ones, but we'll make do. So Bisq network is a decentralized Bitcoin exchange where you can trade Bitcoin for other cryptocurrencies like Monero or fiat currencies like the US dollar or the euro. You can do so with a high degree of privacy. Privacy and security are top priorities for the Bisq software. And the Bisq DAO enables the Bisq network itself to be managed in a decentralized way. We'll talk more about how that actually works. The Bisq DAO is built on the Bitcoin network. The token, the BSQ token that powers it is itself colored Bitcoin. So this is all Bitcoin based. So pretty straightforward roadmap. We'll talk about Bisq, how it works, what it is, what makes it special. And then we'll talk about the DAO and how it's going to implement a decentralized governance mechanism for the network itself. So this is a quick 15 seconds on me. I have a bit of a varied background. I worked in finance, valuations and equity valuations, professional sales, software development, and for the past 9-10 months I've been contributing to the Bisq network on documentation, writing, messaging, that kind of thing. So Bisq is software that functions as an exchange. It's not a website, it's not a mobile app. It is software, open source software, free as in freedom, free as in beer. You're free to go on GitHub, check it out, inspect it, download it, build it yourself if you'd like, or you can install and run the binaries. I chose to include this screen. This is the very first screen you see when you start the software. I don't know if you can read that, but it says step 1 of 4, connecting to the Tor network. That's because every Bisq node is a Tor hidden service. When you're on Bisq, you're anonymous. There are no user accounts. When the software is done loading, this is one of the first screens you'll see. As I said, no accounts, so you're free to just go to town and take an offer and make a trade. The thing to note here is that there is no order matching. So Bisq is peer-to-peer. When you trade on Bisq, you're trading directly with another person. So in a sense, the term exchange is not completely correct. I mean, it's really more of a, you can think of it like an over-the-counter kind of marketplace where you're transacting directly with another person. And this, what you're seeing here, is an order book that's made up of other offers from other peers on the network who happen to be online at the same time that this screenshot was taken. So let's take a look at how it actually works. So we're going to assume that Bob wants to buy Bitcoin from Alice using the US dollar through Zelle. If you're not aware, Zelle is a payment transfer service, much like Venmo. So we're going to assume that Bob has clicked one of the offers that we saw in the past, on the last slide, and that he happens to have confirmed a deal or an intention to deal with Alice, who's going to be selling the Bitcoin. So what's going to happen is Bob will make a deposit, a Bitcoin deposit, 0.01 Bitcoin, along with a tiny amount of fees into a 2 of 3 multi-signature wallet. Alice will deposit the 0.1 Bitcoin that she's selling, along with a smaller deposit and fees into that same wallet. 2 things to note here. Number 1, both counterparties have skin in the game. And that's important because 1/2 of the trade is going to occur off of Bisq. Bisq does not handle anything that's not Bitcoin. It only handles the Bitcoin transfer and the deposits. the payment, when Bob actually sends the payment for the Bitcoin, he's going to send that through Zelle. And he's going to tell Bisq that he made the payment, and Alice will acknowledge it, but that all happens off of Bisq. So once the deposits are made, Bisq will show Bob Alice's payment information. So until this time, and it's actually an important point, all sensitive data, any data that you put into Bisq is stored on your local drive. There is no central server or company or any place that your data is sent. It's stored locally on your computer, and it's only shown to the counterparty of your trade. It's sent encrypted over the network to that person's machine. And so once these deposit transactions are reach one confirmation on the blockchain, Bob will see Alice's Zelle address, and then he'll be able to make the payment. In this case, we're just assuming it's a $300 is what he's paying for the Bitcoin he's buying. He'll send that payment to the bank, which is conveniently very old and looks like it's about to collapse for some reason. Not sure why. But then after that, he'll tell. Oh, so when he sends the payment to Zelle, he'll sign off in Bisq that he sent the payment. Then Alice will check her bank account to see if she got the payment from Bob. Once she sees the payment, she'll also sign off in Bisq and acknowledge that she's received the payment. At this point in time, the 2 of 3 signatures have been satisfied, and Bisq will release the Bitcoin that Bob bought to Bob, along with the security deposit, and Bisq will release the deposit that Alice made to Alice, and the trade is complete. So that's how Bisq works at a high level. Now you might notice that we've talked a little bit about Bisq, we've looked at the interface, we've talked about how trades work at a high level, but we haven't mentioned anything about a DAO. We haven't mentioned anything about a token. And if you look at this, is actually a graph of Bisq's growth over the past, well, since it was founded. Growth has been exponential, everything's been looking great. We've done over 22,000 trades since launching almost 3 years ago in 2016. So why a DAO? Why do we need a DAO? Why do we need a token? The answer to that question has to do with these diagrams. So on the left is where we are right now. So we've got a nice distributed peer-to-peer network for traders. But for contributors, it looks a little different. Fees all go to one place. And decision-making, for the most part, is also done in a fairly centralized way. And until now, that was fine because the main people who were working on Bisq were the founders and a small group of people. But as the project gets bigger, as the contributor network grows, that becomes a vulnerability. And it's better if we can have something more like what we have on the right, where fees can be distributed in a more, you could say, fair way, so that people who contribute to the project are compensated for what they do. And decision-making is also distributed in a way that more contributors have a say, and maybe even users of the software also have a say in the strategy and the direction of the software itself. Now, you might be thinking, well, why not just structure a company and have it collect all the fees and distribute all the fees like any other entity? One of the ideals that Bisq, or one of the principles of Bisq, is to be highly censorship resistant. And to do that, it cannot be a company. In fact, it is not a company. It is not a company, it's not a nonprofit, it's not a legal entity of any kind. It's just software. And they may not seem like a big deal, but when you think about the benefits of a legal entity, collecting revenue and making strategic decisions becomes very hard when you don't have the apparatus of a typical entity. And what do I mean by that? Well, if you don't have an entity, if you don't have a company, you can't really have any management in any traditional sense. You can't have a CEO, you can't have a leadership team, you can't have a board. So who's going to make decisions? When you don't have an entity, you can't have a capital structure. You can't have assets, you can't have liabilities, and you can't have any kind of equity. So if you don't have assets, you can't have bank accounts. You can't even have a wallet. Who's going to own it? So where are you going to, how do you collect revenue? And if you don't have equity, you don't have any value. So there's no room for investors either. And because you're not an entity, you're not registered in any jurisdiction. So you don't have any locality. You don't have a street address. Completely off the grid. So how do you handle decision making? How do you handle collecting revenue, distributing it, and making this thing work? Because everything, every project, every venture needs some kind of vehicle to sustain itself. The answer, one of the answers that Bisq proposes is the Bisq DAO and the BSQ token. The DAO takes care of decision making in a collective way. So if no one person or one entity is in charge, the idea is that more people or everybody's involved. And the BSQ token is the vehicle for transferring value. So let's take a look at how that works. I found it easier to describe the DAO with through example as opposed to explaining it in concept. It's just easier. And we can talk about any other concerns or details afterward if you guys like. So what we're going to do is look at the compensation aspect of the DAO. What happens when a trader pays fees? Where do those fees go, and how are they routed to contributors who have done work on the project? So in this case, we're going to assume that Bob wants to get paid for $1,000 of work he did for Bisq. Let's say he does, maybe he adds some kind of feature to the software, or maybe he writes some documentation. Whatever it is, he contributes value, and he wants to get paid for it. So what he's going to do, first thing he's going to do is make a case for it. Right now, this is done on GitHub. Very simple. Just open an issue, detail what you did, and why it's important. In this case, this is my actual compensation request from January. You can see I listed the documents that I wrote. I did some documentation. And then I linked to more details on that documentation so people reviewing it can see what it actually entailed. And then I also added an amount for how much I think I deserve for those contributions. So once you've done that, you go to Bisq. This is the Bisq client, and there's a DAO section. It's currently in testnet. It's going to go live hopefully soon in the next couple of months based on how well testing goes. So you go into the DAO section and you just file a compensation request and link to the explanations that you put on GitHub. Oh, and crucially, this is very important, when you make the compensation request on Bisq, you include a few Satoshis. It's a very tiny amount of Bitcoin along with your request. And we'll go over why that's important, but that's very important to keep in mind. And compensation requests, just so we're clear, are actually Bitcoin transactions in the background, which is why you can include the Satoshis. Next, after everybody has filed their compensation requests, there will be a voting period. During this period, contributors, traders, any stakeholders who would like can go through the requests that have been made and vote in favor of the ones they like or reject the ones they don't like. Voting is blind, so you can't see what anybody has voted. You kind of have to vote on your own merit or what you think is right. And after voting is done, results are revealed. And going back to the situation with Bob, so Bob made a request, and it turns out his request was approved. Since his request was approved, those Satoshis that he included with his request were colored to become new valid BSQ tokens. If his request was not approved, those Satoshis that he included with his request would not be colored. And they would just remain the tiny amount of Bitcoin that they were. But since they're colored, they take on the value that he asked for, $1,000. Now note that this is a colored coin that's only recognized by Bisq. So if you look on your favorite block explorer, blockstream.info, or whatever, even after this issuance transaction, those Satoshis would look exactly the same. Like they would just look like Bitcoin, like tiny amount of Bitcoin. But on Bisq, they're recognized as taking on the market value of a BSQ token. Yeah?
Are you using counterparty or color coin technology?
No. No, this is
a separate sidechain?
It's a completely custom implementation. It's not a sidechain.
So it's a central database?
It's data that's stored on the Bisq peer-to-peer network. So the hashes of all the transactions are stored on the Bitcoin blockchain.
Okay, I'll hold my questions. Thanks.
Okay. Okay, so at this point, what's happened? So Bob has done work. He's made a request for it, for getting paid for the work. Bisq stakeholders have approved that request, and as a result, the Bisq DAO has issued Bob $1,000 worth of BSQ. Great, but what does that mean? Can Bob go and buy something with BSQ? Probably not. No one really takes BSQ, right? It's Bitcoin is kind of what you want if you want to earn money. This is where traders come in. So right now, traders are paying for trades with Bitcoin. They're paying Bitcoin fees. When the DAO goes live, they'll be able to buy BSQ to make trades at a discount. So a trader will come along and for 90% less than Bitcoin, he can pay, for a 90% discount, he can pay BSQ for trading fees. So the rational trader would do what? They would buy BSQ tokens, pay Bob for his work with Bitcoin, obtain the BSQ token, and then redeem that BSQ token for trades. And in that way, we've accomplished the two goals we set out for. We have no central authorities making decisions. The decision to issue Bob the BSQ in the first place was collective. It's based on stake, which we can talk more about, but it was collective. And there are no financial accounts. There was no wallet owned by anybody, no financial bank account where the funds were routed to and then distributed afterward. So yeah, that's the result. We have governance that is itself decentralized and censorship resistant, just like the software itself. A common criticism, I guess, of tokens is that the proposed workings are not really implemented and therefore not really tested. First of all, the Bisq product has been around for almost 3 years. People use it every day. It's alive and well and growing, as you saw the graph. And the Bisq DAO mechanism has actually been implemented with, you could call, low-tech tools also for the past several months. So for the past several months, contributors have been doing compensation requests on GitHub. BSQ has been issued on Google Spreadsheets, and decision-making has been somewhat democratized through GitHub conversations and thumbs up and that kind of thing. So community involvement has already kind of been implemented in a kind of an approximated way. And if you think about it, it's kind of a cool model because people on Bisq are not slaves to the people who make it. People who use it are not slaves to the people who make it. Unlike what you would find on, unlike what you would find on your typical big tech platform where you're just kind of, at the whims of whatever developers of the platform wanted to do, or who they wanted to ban, or whatever the case may be. Traders, contributors, everybody who uses Bisq has a stake, has a say in how they want the platform to move forward. Just like any open source project, contribution is permissionless. It's merit-based. You don't ask permission to contribute to Bisq or to do anything, any kind of work. I'm here because I wanted to be here, and it was. Of course, I talked with a few people to make sure that this would be a value, or this would be considered a valuable contribution to the project. But it's very much permissionless and merit-based, and when people go through the requests that you make, the compensation requests and the other proposals that you might want to make on the Bisq DAO, it doesn't really matter who you are. There's some people in the project who, I've been there for almost a year now, I still don't know who they are. They're totally, anonymous people. I don't know their names. I don't know what they look like, but they contribute value every month, and they're compensated for it. And I guess the last, perhaps most interesting, one of the most interesting aspects of this is that it provides an elusive, or a solution to a somewhat elusive problem in the world of open source. And how do you monetize it? How do you make it worth contributing to every day? And I guess it's partly a consequence of what it is. I mean, an exchange, it's very easy to charge people for using it. Trade fees are a very reasonable thing to have. But yeah, I mean, we've got a self-sufficient open source project that makes not insignificant revenue and compensates for people who spend time to make it possible. So that's it. I mean, you can check us out at bisq.network. You can check out more about the service. Twitter is bisq_network, and you can find the whole team on Slack. Love to have contributors. We actually have the DAO, as I mentioned, is going to be going live soon. So we're looking for people to help test it. We're looking for people to, do everything, write documentation, help get the word out. Even if you're not technical, there's a lot for you to do. So that's it. Yeah.
If you guys have questions, I'm just going to ask if you can wait until I get to you with the microphone so it hits the recording.
Oh.
Okay. You? Sorry.
So is the Bisq DAO only for governance of the project? It's not for resolving the disputes between the transactions and the trades? Or will that be part of the DAO too?
It will be a part of the DAO too. So right now, it's a good question. I didn't cover disputes. So right now, what happens is when there's a dispute, an arbitrator will step in. That's why it's a 2 of 3 multi-signature. So the third key goes to an arbitrator if they need to step in. That was kind of a imperfect solution. For privacy, it's not that great because you have a third party coming in, looking at what's going on. That's with the DAO, that's going to go away. 2 of 3 is going to become 2 of 2. And if there's an issue, then the DAO will step in. People will step in and make decisions either way. Okay. The reality is that the vast majority of disputes are just like silly protocol, like someone sent a payment late, or something happens which can easily be resolved without anyone having to step in. So we're hoping, looking at the numbers, looking forward, we're hoping that disputes that need a third party to step in and make a decision will be very rare.
You mentioned that the contribution requests are like on-chain, or the hash of the contribution request is on Bitcoin. Is the whole like object of the contribution request, is that put on a chain somewhere or stored on the Bisq implementation somewhere, or it's just the hash of the object?
It's just a hash, and then the data is stored on the clients.
Cool, thanks.
Hey, I found it very interesting that you chose a DAO, and I think that's pretty brave. Have you been introduced to, or has anyone came up to you about KYC, taxation, things that you would have to mitigate as actual, corporation, but now you circumvented those? Are there any repercussions for that? And how do you handle those? How do you plan on handle those?
It's a good question. I think the vision for Bisq is really to be a Forex layer for Bitcoin. That's why the team, or I shouldn't say the team, but the founders have endeavored to go down this route. Bitcoin, you don't need to ask anybody to make a Bitcoin transaction. You shouldn't have to ask anybody to go in and out of Bitcoin either. And I don't know if I have an opinion on, I have opinions on KYC and AML. I'm not sure how they apply to Bisq. I think that's more of a case-by-case kind of thing, report what you like. As a user, I think a core philosophy of Bisq is that the user is sovereign. And I think it's the user's responsibility to comply with whatever regulations and rules they need to.
Philosophy of USA Patriotic Act or OFAC principles, right? When a bank, say, for example, say that I don't know who the customer is, whether they're falling under any terrorist or ill-gotten money is being channelized, the onus is on the bank or exchange to ensure that the person, you should know the customer, where the money is coming from before channelizing. That is the spirit of the regulation. So I would suggest you to check the OFAC or KYC compliance rules for the best interest of your company.
That's true.
Okay, it's yeah, there is no company. Good question. Yeah. So if there is a resolution happens, I think somebody was asking how the arbitration takes place.
So arbitration is, it's essentially, as I said, it's imperfect. So right now we have a couple of anonymous people who are trusted, who, basically step in and talk to each party individually to try to come to an amicable solution.
Okay. Second question is, how do you establish the trust? Let's say, for example, if I'm buying something, whether my counterparty will honor the obligation or not. That's where clearinghouse or settlement house will act as an ovation. Mm-hmm. Even if the other person defaults, clearinghouse will provide the guarantee. Whereas here, there is no such guarantee. So
there's a deposit, though.
What is that?
There's a deposit. So each person is required to put in a Bitcoin deposit before they're even shown the payment details of the other person.
How do you determine how much deposit will be charged?
So there's a minimum. There's a minimum of 0.01 Bitcoins. Mm-hmm. You can, when you make the offer, you can decide to increase that amount if you'd like, if it makes you feel safer. But generally, the 0.01 is what's used, and it's generally worked pretty well.
Got it.
Yeah, exactly. It's a multi-sig account. Who
owns that escrow account?
No one.
No one.
It's you and three people. Two. You and your counterparty. Each have keys to that wallet.
To that escrow account?
you could, I mean, I think escrow is technically not correct because there is no third party per se. It's just you and the counterparty.
Okay. If there is my question is, me and my counterparty putting some initial deposit or initial margin, all of a sudden the currency has a major fluctuation that causes even one person to forego that initial deposit. How do you prevent the other person default? Let's say, for example, I put a $10 worth of 10 bitcoins, for example, whatever, just a hypothetical scenario, the 10% of the transaction. If the bitcoin price has gone down by 40%, right, I supposed to buy, whereas counterparty is supposed to sell at a predetermined price. Since the price has gone down 30 or 40%, I don't have any incentive to stick to my terms. I let go the initial margin that I posted because the loss is $30. If I still honor that agreement, in that case, who will enforce the transaction?
That is a very good point. If you guys follow the BitMEX blog, they actually posted, I think, maybe 6 or 7 weeks ago, that transactions on Bisq are kind of like an American options contract, where exactly what you're saying. I mean, if there's a lot of volatility, then one party might not have a rational reason to follow through on completing the deal.
If it is an option, that's fine. The buyer will have a right to execute or walk away. At the most, he is losing the premium.
Right.
But in a spot trade, I was looking at your transactions, given the kind of volatility ever since the cryptocurrencies have been launched so high, and you need to commensurate the kind of volatility market is facing so that nobody will walk out from the transaction. That's one thing, right? And second, our friend was asking about the question, right? How do you know that the two parties are genuine persons? It could be fake people, or it could be the funds could be from ill-gotten money, from Silk Road, or drugs, narcotic money kind of thing. Ultimately, there is a systemic responsibility to ensure that building a healthy financial system, right? So if you don't cross-check who those people are against some kind of OFAC list or something, and you are allowing to bring all the ill-gotten money, terrorist money, drug dealers' money into the system.
The best thing I can say to that is one of the co-founders of Bisq put it like this. He said, if Bitcoin allows you to be your own bank, Bisq allows you to be your own exchange. It's sovereignty, and there's a price to sovereignty.
True. I understand the philosophy, but
Right.
you are not able to mitigate the default risk. Unless you provide that kind of trust, you are not able to get the enough volume on buyer side, seller side, and have the liquidity. That is the fundamental problem. Why there is so much of volatility? It is because on one side there will be more buyer, meaning the price discovery is not happening in a smooth and efficient manner, right? That's where so much of volatility on a daily basis we are seeing in the cryptocurrency. Unless you establish the trust and seamless price discovery process happens, you will always see the kind of volatility what you see in the marketplace.
Are you talking about volatility on Bisq or volatility in general?
In general, of course, that is very much valid for Bisq as well.
Well, it's a general issue. Bisq,
I
Bisq.
think SEC is enforcing the regulation. Look at recent guidelines. They have to enforce every entity. Of course, here in this case, there is no company, there is no ownership, which is a revolutionary concept. I do agree. But ultimately, if tomorrow SEC comes, who takes the onus of it here? SEC want to do some investigation of Bisq, right? Who would be the point person on behalf of Bisq to interface with the regulators? When I am putting as a trader some money, I need to ensure that there has to be some trust factor, there has to be some guarantee, and there has to be some accountability if regulator comes and audit or anything like that.
But that's the point of a DAO. Like, that's actually set up explicitly to obviate that way of thinking. And you get the choice whether or not you want to participate in it or not. Right?
I mean, your concerns
and
are valid.
The volatility part, I would say, like, last year we had Bitcoin. I think it was the first 6 months, it was something like 40% of the days, there was more than a 10% swing, which meant that the credit industry, which I was part of at the time, basically collapsed. Like, you know, the Bitcoin credit or the credit system is not working because so many people defaulted on their obligations. But we have dramatically come down in the past 6 months. And so it is starting to stabilize, and we're still like late 1996 adoption levels of like internet in comparison, right? As we get more and more people on it, we're going to go see more stable volumes and velocity going through there, and you're going to stabilize some of the currencies. Plus, there is other options too, where you can go do like, you know, you could do swaps, like immediate swaps, and you can go peg to like a fiat or stable coins because they do exist. So there's lots of options, but the whole point here, I think, is that we get to go figure out new ways of market where, no, there isn't one person, but you get to choose if you participate or not. Also, who here is tired of the argument about people saying that we can't trust it because like narcotics or Silk Road has ruined Bitcoin? The bottom line is US dollar is used 5 times more than Bitcoin is for those kinds of things. So why is that not demonized?
Well, also,
Sorry.
it's
I got to throw that one out there. You had one here. Sorry.
Hey, all right, thanks. Quick question, gentleman over here. Who does the FCC talk to when they want to regulate Bitcoin? So ask that question first, and then, you know, why doesn't any other organization have the right to do what Bitcoin did? You know, Bitcoin has a mysterious founder that nobody knows, but they have known contributors. And so maybe that's a template to what other organizations can follow if they want to do the same thing, you know, and nobody's stopping them.
This,
you know?
thank you. This software is really nothing more than a digital way to do a face-to-face trade. I can walk up to somebody, bring cash, they have Bitcoin, we do a deal, everything's good. Where's the issue? You know, it's
also for your, I guess, middleware. Have you thought of, you know, maybe piping into one of the known escrow tools out there? I think like Quick Assets Token. There are others, but these are people or these are organizations that do specific escrow services for the blockchain. And I was wondering if you were thinking about, you know, partnering with any of these to facilitate that service. So it's kind of a more trusted name, not like Bisq isn't trusted, but now you have 2 trusted entities that, you know, you can put, you know, trust your Bitcoin or your money with.
it's a good question. I don't think that's been considered. I'm not sure what the value add would be. I guess the idea is that the multi-signature setup is, I mean, it's secure on its own. I'm not sure if there's a need for an additional entity to be involved there.
A lot of the challenges that we just talked about seem like they would be solved in the future by the Lightning Network and atomic swaps. Do you have that in your roadmap?
It's on the roadmap, not near term. I think the DAO, getting the DAO launched first is kind of what we want to do, and then get rid of arbitrators. That's another top goal. But yes, Lightning is certainly something that's on the roadmap.
So sorry, it wasn't clear to me.
Yeah.
If there is a dispute and neither party wants to sign off on the transaction to release the funds, is it time locked? How does the funds get returned essentially or awarded?
So right now with arbitrators,
Okay, so there's always an arbitrator?
there's always an arbitrator available. And to my knowledge, the solution has always been devised. What's going to happen when arbitrators go away is that if the two parties cannot come to an agreement, there will be a time, I think, will it be time? I think it will be a time lock transaction. Both parties' Bitcoins will be basically confiscated, and then the DAO will vote one way or another. A mediator will look at the situation and come up with a recommendation, and then the DAO will vote one way or another. And the idea is that by confiscating the Bitcoin, there's a much lower chance that a spammer will even want to try spamming or doing any kind of weird activity.
Hold on.
Are there any, sorry, thank you. Out of the 22,000 transactions you mentioned in your prior deck, what is the percentage of default transactions versus successful transactions? Do you have any statistics you want to share?
I mean, the vast majority, I don't know numbers. I can tell you that of the existing payment methods, there's been one chargeback. And I mean, there have been a couple of other chargebacks, but those payment methods were removed. For example, Venmo had an issue with that. There's one more, Cash App also had a problem with chargebacks. So those have been removed. But one chargeback with Zelle, and that was, I think, some kind of other issue. It was some kind of a special quirk with that transaction. But yes, in general, I can't point to any particular issues.
Okay. Are insufficient funds for one party not being able to pay back or walk out or defaults, basically?
Yeah, I mean, if there's an issue like that, then it's pretty obvious, and then the person loses their deposit.
Is the only way that tokens are being created through the compensation requests, or is there other mechanisms that generate tokens?
Yes, thanks for asking about that. Compensation requests are the only way to issue, well, that in the Genesis transaction. So there's a Genesis transaction for all the tokens that have been issued to contributors so far, while the DAO has not been active. And then when the DAO does go active, compensation requests will be the only way to generate tokens. Once they're issued, they'll be traded like a token, and then they'll be burned when a trader uses them to pay fees. So there's a bit of a supply and demand dynamic there.
So how do you guys pick what coins, and how does that work as far as implementing new coins onto your network?
So far, that's kind of been a point of contention. So far, it's been anyone who wants to implement a coin can implement the coin. There isn't really much of an infrastructure need, or there isn't a lot of work to implement a new coin. As long as there's a public block explorer and transactions can be verified publicly by an arbitrator, the coin can be added. We do impose right now a no ICO policy. So if your coin is done in ICO, then don't allow that. There's just a lot of legal risk and issues there, so we don't do that. But yeah, it's a pretty open policy. That might change with the DAO. We might start charging. I think there's talk about doing a per day fee for people who want to add tokens, but then if they don't get any activity, it kind of becomes dead weight. So there might be a per day fee in the future, but right now it's pretty open.
Do you know what happened with the Grin coin, and there were trades and Bisq, and then you guys cut it off?
It did. We had to stop it, and the reason was that I think 75 or 80% of the trades, Grin trades, were going to arbitration, which is like the flip. Usually it's much less than that, and there were a couple of There were a couple of instances where the arbitrator just didn't know what to do because they weren't able to verify the transaction. I'm not exactly sure how Grin works, but it's not your typical, you can't just look it up. I think Beam has a way to, I think they provided some kind of a public verification system, but I don't think Grin has that yet. So, cool. All right, thank you.